Testing 1 2 3. Testing 1 2 3.
Syphilis 1 2 3. Syphilis. Sweaty balls. So Straza, here we are again. We had to re-record this episode with Mike Nauss because the geniuses at our studio in San Diego, I know Gene's listening, lost the original recording.
Yeah.
You know what? Go ahead. It's probably for the best, right? We probably could do better.
When you heard this, were you having Batu Caves PTSD?
Dude, it's funny you say that. Straza and I went to Kuala Lumpur last summer, and we filmed some awesome footage at probably the coolest spot in the entire city when we were there.
Monkeys were eating our hands.
Yeah, just 2 hours of pure gold, and our video man forgot to record it or something, or he lost the tape, or I don't know what it was. All gone. Oof. This seems to be a theme with us, Straza.
No, I think this is just how it works. These things happen, and that's why we're flexible, and we're happy to tape another one, because the nice thing about this is we've been taping so many of these since we just started. I don't even remember the conversation, so I think we need to have it again anyway.
No, it's funny you say that, because I've been writing the intros to the episodes when we publish them live, and I have to re-listen to the episode because I'm like, a little inside baseball, everybody. These episodes you're watching for the first time, we actually record them like 2-3 weeks prior. We try to keep ahead of the game a little bit, and by the time it's ready to go live, because we've had 3 or 4 more conversations since, I forget what I've talked about. And You know what? It's a good thing that we're bringing Mike Nauss back again, because I know we had a great conversation. I remember a couple things we talked about, but I really don't remember much. I'm sure Michael said a lot of brilliant things. You know what? Let's bring Michael onto the camera. Let's have him drop some knowledge with us. Mike, dude, thanks for having so much patience and agreeing to deal with these numbnuts here who can't get their technology straight. Thanks for coming back.
Absolutely. And yeah, we talked about Trailer Park Boys last time, and Steve was telling me how big of a fan of Trailer Park Boys he was, as the resident Canadian, I guess. Right. You have to bring that up.
You're friends with them. I forgot.
Yeah, we went drinking. They filmed right up the road.
Did you get any bar fights with those guys?
I did not, but I think I was saying last time that Bubbles Bar actually got shut down because there was just too many fights, and the cops are just like, we can't deal with this stuff at 4 a.m. every single morning anymore.
I would love to have a beer with the 3 of those guys. I think that's one of the most underrated shows.
We speaking of fights in random places, there was almost a parents' brawl at my son's baseball game last night. It got crazy.
Why?
The other team, I'm blaming it on the other team. Their parents were just over the line, treating it like it was a Texas high school football game, Friday Night Lights, playoffs game. Like, that's like their attitude. And these are 9-year-old kids who are just learning how to play baseball. It was unbelievable. I'm an assistant coach, and I was just like, I couldn't believe what I was seeing in the stands. Like, these parents were just out of control. Anyway,
that sounds like an assistant coach blaming it on the other team. Now we have to go to the tape, and it was, one of your kids that tripped one of theirs or something.
It actually wasn't even about the kids, really. It was the other team had a really loud speaker that they bring to the games, and they play walk-up music for their kids, and it's really obnoxious. We played this team like a month ago, and it was really disturbing, and we couldn't talk to our players during in between innings. We're trying to coach them, and so we asked the team this game, hey, can you maybe tone it down a little bit? Maybe not play it while our kids are in the field. Anyway, parents didn't listen. Then there's a lot of arguing, a lot of bickering. The game was paused for a while. My team almost forfeit. It was a whole thing. Anyway,
psychological warfare.
That's what it was. In 9-year-olds baseball. Yeah.
Of all the stories, the dad stories I hear from all you guys, it's the coaching ones I look forward to the most. That's got to be one of the best parts of dadhood, no?
The coaching's fun. I got a 2-year-old who's in soccer, who plays soccer sometimes, which is just a bunch of kids on the field picking flowers, and we're trying to get them not to kill themselves somehow, and that's 90% of parenting, I think, until they're 5, is just don't fall down the stairs and don't lick that electrical socket and so on and so forth.
Well, this is actually a good place to jump in, Straza, because the 3 of us in various forms are engaged in trader education, either directly or indirectly. And
Yeah.
more than the three of us and the most, I think Michael is more in that area, because Michael, you, in the roles you have at various jobs and your own business and research, you're engaged in teaching people about systematic trading, about algorithmic trading. And so I'm sure the things you learn, the skills you learn as a dad, translate or can be brought over to the trading world as well. No?
Well, absolutely. It's like anything else. It's like, learning how to tie your shoes or spell or whatever. You start small and, you start with the very basics and then kind of work your way up from there. And you notice, just like with kids, who the whole saying, you got to walk before you can run, they're trying to take off right away. And you're like, no, well, you can't build a, giant self-balancing based off of volatility type system. Let's just try to build a breakout system and see how that works and go from there. So I think teaching in all forms has a lot of parallels, whether it's English or again, stochastic equations and all that kind of nerd stuff.
Yeah. You've been teaching people how to trade for a long time, or teaching people concepts about trading for a long time. And I have to imagine that doing that takes a lot of patience, and the patience that you've learned or practiced in that definitely translates at home with the two kids, right?
Yeah, because it's a lot of unlearning. Generally by the time somebody is interested in actually sitting down and learning what it takes to build their own systems or their own trading styles and things like that, they've already, found the guru who promised the quintuple their money and, hey, I make 200% a month and all this insanity. So yeah, usually it's okay. Now, what have you learned? Now let me unlearn all of that stuff, and then let's start again with what's actually possible, and then go from there.
I think the teaching stuff also forces us to make sure that we really know our material really well. Yeah. Because if you're trying to explain something to somebody who doesn't understand it at all, you really have to be able to like boil it down, simplify it. And by doing the teaching, sometimes I'll find I need to figure this out better, or figure out a way to explain it better, right, so I can get my point across. And then that helps me also. So
yeah, two things for that. One of my old trading mentors always said, if you can't explain why you're in the trade to someone who's never traded before, then get out of the trade, right? It should be as simple as, hey, it broke this level. You can see it had stayed that level for a while and it broke that. And then the other thing, the best piece of content I think I ever did, it's 4 years old now, but during the pandemic, I sat down with my wife, who is a dental hygienist, and she was a flight attendant before then and an esthetician before then. And we went entirely through the basics of trading. And that was so enlightening for me, because sometimes you talk about things, because I've been doing this for 20 years, as if you should know something, and you just go way too high. And it was great to have someone just to pull you back and say, no, you have to break down, I don't understand what a hammer candle is. And I'm like, oh, look, it's a hammer candle, right? The VWAP. And they're like, no, come back and explain all of the basics. So we actually started with, what is a stock? Like, what actually is an equity? When you hit the buy button, what happens to your order to hit the exchange, all the way at the basics, and went up. And again, for me, it was great because it just teaches me, right, this is the level you need to start at, and you need to go from there.
So you did this at the pandemic, you said? You and your wife?
Yeah, locked in, nothing to do, right?
And how has it gone? 4 years into it, how did you do?
It was good. We've had a wedding and 2 kids since then, so she's not super active in the market, but she's taking some trades here or there. That, that's for free on my website. I just thought it was a great little piece of content to say, okay, here's from the basics to all the way to how to build a trading plan. And then, if you want to go more advanced after that, then that's something that makes sense down the line. But it's great. I can actually talk to her about stocks, which was actually the reason that the idea got started. Is she's like, yeah, we're getting married soon. I have no idea what you do. So it's a good way to explain it, right? Sit down. Let's start at the beginning.
You're a better husband than me, Michael. I don't think I would have the patience to teach my wife about trading.
But I monetized it, so that helps, right?
Oh, that's awesome. So we're talking all about teaching and learning. Who taught you? How did you learn?
So my story starts way back in university. You can see from the gray in the beard, that's a while ago now. But I actually started at a prop firm. I remember the intro questions. This was before HFTs and before computerization of the market. Back when, we were the HFTs, I would do 250, 300 trades a day. It was a wild time. And they asked simple questions like, what kind of video games do you play? Right. And I was kind of semi-competitive at this StarCraft game, which is a real-time strategy game. So it meant I could think quickly and hit buttons quickly. And that's all they wanted. They said, you're in. So I did that.
Wasn't it all about the keyboard back then too?
They wouldn't give you a mouse until you were there for 6 months. You wouldn't even, it wasn't plugged in. Right. It was, here's your keyboard. Also, you weren't allowed to load up a chart, because back then they thought the charts were misleading to people.
Black magic, they used to call it at one of the firms I worked at. Yeah.
So if you didn't have a chart, what was your strategy? Were you guys just scalping, just playing the order flow?
Just playing the order book. This was back before refreshing orders and HFTs and scalpers, where, a stock would get to a significant price and you would actually see that there's a large sell order there. So you'd undercut the sell order a bit and you're scalping out for pennies. Again, games that just got completely blown out of the water when that started. And it was really interesting going to school for finance and learning about efficient market hypothesis and all this, and then literally running from one end of the city to the other to get to my trading desk before the market opened, and then scalping in and out for pennies and just saying, this isn't really
so
what
you
they
learned
thought
that
at all.
So you learn that some of these academic lessons or economic theories that we learn in school were maybe not the best right off the bat. You just jumped right into it and you were like, EMH, what? Watching the market move every day.
Well,
and then
sorry, go ahead.
Well, this was also the infancy of YouTube, and I know we're all friends with Brian Shannon, and that's how I ended up meeting him, is because even back then, this was 2006, 2007, he was making YouTube videos way back when YouTube was so old that you weren't allowed to upload more than, I think, 5 minutes at a time because of bandwidth. So he would start a video, and then when the 5 minute hit cut, he would start with part 2 and he would upload that. And so, he's what started to get me into charts as that kind of edge of, scalping the order book started to go away. So I completely knew what they were talking about was hogwash, right off the jump.
So the rise of the algos changed everything at that job. Like, what happened?
Yeah, well, that's exactly it. There was something that came through called Reg NMS, which basically created a nationwide order book, and no longer was there any advantage to being the fastest people out there. That's when, all the crazy stories of, hey, we're trying to move, 5 feet closer to where the stock market is, and we're trying to shorten the fiber optic cable and all of that. And then eventually that game was just completely dead, right? The order book was useless. There was refreshing orders and all this kind of stuff. So I tried to make a go of it, day trading with charts, but the firm still thought it was voodoo, and they said no. So I moved on to working in the hedge fund space after that.
Well, Michael, you left out one key point of what changed when Reg and MS came in. Mm-hmm. When they basically, the way the NASDAQ level 2 order book worked completely changed. It went from, you could see actually who were the buyers and who were the sellers. You could see that it was Goldman Sachs on the bid and Merrill Lynch on the offer. You could see how much they were bidding for, how much they were trying to sell. You could see that, and that was real information that we were taking advantage of. And then when they changed the market, everything went anonymous. It went to just anonymous exchanges where active participants can hide their true intentions. Like, they might be trying to buy 1 million shares, but they're just posting that they're bidding 100 shares at a time. And so you didn't know the true size. You didn't know who the players were. And that was information that was very valuable to us, right? I mean, this is the game we were playing in the late 90s at the firm I was at.
Yeah, and order spoofing. So, a stock would get to a level and there would be a large order there, and you would take a trade in front of it, and then the order would just vanish and then come back later. And everything just got so fast that before, when humans could do a pretty good job of seeing this stuff and reading it and playing around it, that just kind of, vanished, like most things. And it's something that happens all the time in trading, is that there's some sort of an edge or something out there. Then the market figures out a way to smooth that out. And it always happens, and it always will happen. And the people who adapt and move on do fantastic. And the people who are kind of stuck, they have a bad day.
See, when markets change like this and evolve, which they always are, like, there's people adapting everywhere. I remember God, it must 2011. I was on an audit of one of the first high frequency traders that were publicly traded, and they had the fiber optic cables on their balance sheet as an intangible asset. And I can't tell you what a thing it was, because they had never seen this in the industry before. We didn't know how to value it. We didn't know how to audit it. The meetings we had into the nights about these fiber optic cables, but it was crazy. But that's, that's how they did it. Running them from the West Coast too. It was crazy.
Yeah. Well, you guys are talking about how the speed changed the game, and you were talking a moment ago, the two of you, about the efficient market hypothesis and how traders typically laugh at that theory. I will submit that I think that the efficient market hypothesis is truer the longer your time frame, right? Yeah. If you're a long-term investor looking at stocks and investments like Warren Buffett does, then yeah, the efficient market hypothesis makes sense in that scenario. But the people who are scalping, algo traders, no, they're uncovering edges that cannot be explained in a textbook by the fundamentals of a company. Absolutely not.
Well, yeah, I always say, hey, look at chart at GME and explain to me how this is moving based off of fundamentals and known information about, this retailer that doesn't need to exist anymore. Explain that to me. And then also there's a handful examples every day of a stock that announces a little piece of news and it's up 300-400%, and then it's back down to near zero a couple days later.
It's David Lundgren who always says that the best fundamental analyst is the long-term trend, right?
Yep.
So like technicians adhere to this fundamentals matter in the long run, right? You do fundamental things, do you not?
Really, there's a lot of filtering that happens. For example, as a systems trader, when I'm looking for trend following systems, I'm generally on the weekly chart, and I'm generally looking at things like the Russell 1000, because there is fundamental filters that already occur from there. If I'm buying things that are continuing trends and breaking out of trends, and they're in the Russell 1000, I just have some faith that there's already been some sort of fundamental checks. I know it's not a penny stock that is fake and doesn't exist. So yeah, I think everybody, just by the merit of looking at trends, has to look at some sort of fundamentals. And if you have your universe filtered at all away from the penny stocks and kind of the junky names, with whether you want to admit it or not, you're doing fundamental analysis there too.
If you're filtering by market cap, you may not want to hear this if you're like a technical purist, but that's fundamentals. That's the best fundamental quality filter that we have as market cap, right? Can't get paid for being good.
Right. That's the whole myth of passive investing in the S&P 500. It's an active investing vehicle. It's just invested by market cap. It just, the idea is that the larger the market cap instrument, the more there's some sort of reason that occurred, and that will continue to occur for some time. And then when it gets cycled out, it gets cycled out. So yeah, market cap is huge, because just like anything, you're just taking all of the people out there that do that weird kind of fundamental analysis, and their opinions are being reflected in price. And we're just looking at that as well.
Strazza, you hit it on the head, man. Like we at All Star Charts, we're a technical analysis research shop, but sorting and filtering by fundamentals is absolutely essential to what we do. And it's all about kind of setting the pond that you want to fish in, right? I don't want to just be looking for long ideas in every stock of the universe. I want to be looking for long ideas in certain areas that meet certain criteria, and fundamentals give us a fantastic way to sort it. And you know what? I learned that very early in my trading career, and I recommend this book to everybody who's new to trading. And they always ask me, what's a good book to learn about trading? I always have them start with How to Trade in Stocks by William O'Neill, the founder of Investors Business Daily. That book gives a very easy to follow understanding of how to use fundamentals to begin your filtering, and then how to use technicals to time your entries and exits. It's to me, it's like the complete trading process in one book, better encapsulated than any book I've ever read. You guys agree or disagree?
Oh, it's so good. It's the simplicity, right? Like the fundamental analysis he's doing in that book is so high level. Right. But that's what he's doing. He's just creating a universe, and then he's using momentum and technical filters. But I think, is he like the fusion analysis king, guys? He is, right?
Oh, yeah. Well, and as someone, I was saying, after the prop firm, I went into the hedge fund world, and I saw hundreds of hedge funds and how they worked. There was not a purist in any respects, right? They were always either what I'd call gimmick funds, which were kind of playing some sort of discrepancy that was happening in the market at the time, or they were, we have a fundamental thesis and then we have a couple technicians that are timing entry and exits and monitoring trends. And there was always that kind of give or take, even if they were quant funds. They're like, okay, we have a quant fund and that's using some sort of discrepancy in the market. And then we're going to combine that with some sort of human interaction. So, you could use an MMA analogy, right? When that sport started, if anyone watched those original mixed martial arts, the UFCs, they were crazy. You'd have like a kung fu guy versus a karate guy or whatever, and then eventually it all melded into some mix of a handful of martial arts that end up happening. And that happens with pretty much everything, with all sports, with everything over time. If something gets discovered, it gets just slotted into a process that somebody else will do.
Yeah. Fun fact, Straza, it's been a while now, so there's probably some people out there who don't know this, but Mike and I used to work together at a trading software company, and one of the most frequently asked for features from new customers was they wanted a alert tool that would alert them when stocks that satisfy the can slim criteria, which is Investors Business Daily's thing. Yeah. Like they wanted an alerting tool that would say, hey, let me know when a stock's making a new breakout on a stock that meets all these criteria. That was like the number one request I would get when I was there. I don't know about you, Michael, but I'd hear about it all the time.
Yeah, and we built it because it works, and it still works. You hear about all the Trader Lion guys out there. There's a whole group of people, and they still do the same idea of modified slightly. And it's funny that as a systems trader, I spend a lot of my time reading papers and testing theories and reading papers and testing theories. At the end of the day, it comes back to a lot of the stuff that was discovered ages ago, right? You have Jerry Parker, who's doing a modified version of the turtle trading system to this day and doing fantastically. And then you have people who are doing modified versions of some sort of William O'Neill thing and doing fantastically. And it's just, why reinvent the wheel when something is out there and it works?
So let's talk about your journey to becoming a systems trader and finding things that work. You started with the order flow trading right after college. Then you went to some institutions, kind of saw the way things, were going on behind the scenes. When did you start getting interested in systems and quantitative analysis and technical analysis?
Yeah, the beauty of working for the hedge funds was I got to see it all. I got to see the global macro guys and the value investors and the growth investors. And even back then, because it was 2008, there was distressed debt investing and all of this. And they all seemed to have periods of time they worked fantastically and periods of time they didn't. And then I was exposed to multi-strategy funds, and they seem to always do well. And for those who don't know, call it a fund of funds or a multi-strategy fund is a hedge fund that invests in a bunch of different hedge funds, right? So the idea is if I can build a hedge fund and I can find a growth fund of funds. Yeah. So if I can find a growth manager and a value manager and, someone who's a quant and and I can diversify as opposed to diversifying amongst, stocks or bonds or whatever. If I can diversify amongst strategies, then I know I'm going to have something that works in general on most markets. Strategy A might not do so well right now, and then strategy B is doing okay, and it helps smooth out returns. And that really kind of got my head searching, and I decided to start to build a bunch of different strategies and trade those kind of depending on what the market had. And that naturally kind of fit into more quantitative analysis, because there's so much going on that I need some sort of system to tell me, yes, this is a strategy, that works good in bull markets, and this is a strategy that may work well in bear markets. And so then it becomes my job is just to try to figure out what playground we're playing in, and then try to pick the strategy that I know that I've built, that I've back tested, that will perform the best in that particular market.
So will you turn off the others? Right? We say, okay, this is the strategy for this environment, and you completely turn off the others, or is it an allocation exercise where you're giving more to the one that you think is better for this environment, but still leaving some in the others?
It's more of an allocation exercise. So, but some of them have natural turn on and turn off points without me really doing anything. So, for example, a breakout trend following system, that's, looking at, Russell 1000 stocks breaking out into new highs, you're not going to see a lot of those in a bear market. So it just kind of naturally turns off on its own. Whereas revision to the mean system, a system that's looking to buy dips, will just naturally have more occurrences and more securities that come up in those scans on, bear markets and so on and so forth. So, and then sometimes there's regime filters. So basically I'll put in filters that say, hey, if the breadth is weak or if the SPY is below the 200-day moving average is a very famous one, just don't buy breakouts, right? So sometimes the system does it itself, but for me, it's mostly waiting. And that's for the reason of, I'm going to be okay understanding based off being a CMT and going through 100 charts every day. I'm going to be okay at guessing what kind of playground we're in. But if I'm wrong, I still want to have some exposure to those long systems, even if they're going to be a drag in suboptimal markets.
So, Michael, if I'm reading between the lines correctly, it sounds to me that your initial interest in systematic trading and algorithmic trading stemmed from more the intellectual exercise of putting diversified strategies together and having that benefit, which is great. Mm-hmm. But that's not how everyone gets there. Some people, myself included, I was attracted to systematic trading. I used to be a systematic trader when I traded commodities. My main attraction to that was because I knew that my head was the biggest weakness in my trading strategy. And I needed to take myself outside of the X's and O's and the execution of my strategy and let my strategy determine it and let the computer make the trades, because I trusted the system, but I didn't trust myself to act at the best times. And that's a different way that people get into systematic trading.
That's a great point, Sean. I think that's the more common way too. I think you're a little unique in that way, Michael. Like you kind of figured it out. I'm trying to build a bunch of uncorrelated return streams here, and that's probably because you worked at the institution.
So Michael's smarter than us is what you're saying, Sreza.
But no, I always, people talk about it all the time and they approach me and they say, hey, should I day trade? Should I swing trade? Should I be discretionary? Should I be systematic? And I always recommend, while we're recommending books, Thinking Fast and Slow by Daniel Kahneman. Rest in peace. I think he passed recently. It's an amazing book. Just to summarize, it basically just talks about how different people's brains work differently, which I don't think surprises anyone. And if you are someone who is more of you're okay dealing with uncertain information and making decisions, kind of at the seat of your pants type of thing, then maybe you want to be a discretionary day trader. For me, I found that the more, like Sean was saying, the more involvement I have in a system and the shorter term my charts go, just the worse my performance. So it just made sense for me to zoom out in the longer term. And if I'm doing anything that could be uncomfortable, I guess, and that my brain won't like, is I'm going to turn that over to a system and just say, hey, allow this to take care of that. But I really do think it's a personality thing. I would argue, systematic trading is on a spectrum, and, you've got systematic and you've got discretion, and there is no trader that lives fully discretion. There's some that maybe are fully systematic, but even people who are quote unquote discretionary traders usually have the same watch list of ETFs to go through. They have some sort of top down analysis process. They have, even if it's not, systematized in a computer, that at the end of the day, they're going through the same kind of checks and balances, and they're coming out with the trade ideas. So I would argue that everybody who is successful is systematic. The people who just, I'm going to bring up Apple chart and try to predict what's going to happen next, those people generally have a bad time. So I would say everybody is systematic. The question is, where on the spectrum you want to hang out.
See, I had an opposite experience of you. So I spent time in 4 different hedge funds earlier on in my career, and I was astonished by how discretionary they were. Mm-hmm. Really mind blown. You didn't find that at some of them? Like one of the famous hedge fund managers that I worked for, they used to call him a gut trader. And I was like, what does that mean? And it was pretty true.
So, the hedge funds I worked with, first of all, we were a very small boutique. So I got the little guys that most of the big hedge fund administrators and things like that didn't want to touch. Right. And there was just a common cycle that I would find with those gut traders all the time. I was there for about 10 years, and it was hotshot trader comes in with a trading style that works really, really well, maybe with a small amount. He built a good track record. He comes in, people throw money at him hand over fist. He crossed that $1 billion, $2 billion mark and then just implodes just over and over and over again. And what I found was that the people who were the most systematic and the most kind of hands off just had those best returns. But then also, again, the real key of it was that fund to fund idea of the fact that I'm going to invest in 5 funds. I'm going to make sure the returns are as uncorrelated as possible. And there's never going to be a time where I'm going to be the absolute standout winner, because when that system is working, the other ones are dragging. But they were able just to print over and over and over again, market beating or market matching returns with lower drawdown. And, that's what I'm after.
I think this is one of those secrets too, right? So at the long short hedge funds, they're not technically fund of funds, but they're built that way. In essence, they work that way, right? Because you have 100 different portfolio managers, you give them all an allocation, and they're all going to trade a different strategy. And then the hedge fund manager, the guy at top, will decide who gets the most money, right? And when he likes one strategy and what it's in, he'll press the gas and make sure that, we leverage that one.
Yeah. And that's my goal, right? And that's where I try to lie in. I go through, again, just CMT, old school, draw lines on charts, try to look at relative charts and what's going to perform best and what's going to perform worse. And then I step in 2 areas. One is I'm going to allocate strategies based off what I think is going to work best in that market. And B, when the system outputs a bunch of symbols, I go through all of those symbols at the end of every week and I look at them on the charts and I do my analysis there as well. Because at the end of the day, a system could tell you, yes, this stock perfectly met all these criterias. And then you look at it by eye and it just looks awful. So it's a good way to detach yourself from the outcome because you're trading the system. It's a good way to measure myself because I don't measure myself to the performance of the market. I measure myself versus the performance of the system. If I'm beating the system, I'm doing a good job. If I'm underperforming the system, well, then I should have just let it work. And then again, that stepping on the gas or stepping on the brakes, depending on what's happening.
So like you said, you try to keep it as 100% systems as possible, but there's still always going to be that discretionary aspect. You are making the most important decision in a discretionary way of what to allocate the most to. You ever, just mess it up? You let the human mess it up?
Oh yeah, all the time. It's sometimes that ugly stock that I just couldn't push the gas on that ends up doing the best. But over the long run, I'd say I generally save myself more often than not. So, I was good enough anyway, come 2023, 2024, to start turning off any sort of short systems or revision to the mean systems and leaning more on my weekly trend following systems. And that does well. One of my best moments was 2020, right? You build all these systems and they plan for the 100%, but 2020 was just craziness. No system could ever work for that. And there's no reason even back testing that event because that you don't think that event will happen again. I just turned everything off. I just, waited. I had a day trading system that I ran when the volatility was high, but everything else got shut off. And then when the market, looked like it had found its footing anyway, I turned everything back on. So you take the equity curve as it's in the backtesting program and mine ends up being better for at least that instrument. So, if I can just do that, if I can save the system from a handful of bear markets or crazy events like that occur, then I think in the long run, I'm going to be a net benefit to it.
And you're hitting on a key point about trading in general, like the longevity of trading. You can't be a long-term winner if you have those occasional big blowups. It screws up the math. It has to be the opposite. In a perfect world, not a perfect world, this is not true for everybody, but for many traders, many successful traders, the way it generally works out is they have a shit ton of trades that basically are a wash, right? But small winners, small losers, basically just churning commissions. That's 80% of their trades, maybe 90% of their trades. But that small handful that were big wins, that's where their entire profit for the year, for the quarter, whatever, that's where all their profits were. And what you're talking about is the opposite, right? You could have this system that's doing well, but every once in a while we have these crazy events. And if your system puts you in a position that you're exposed to take a huge loss, that screws up everything. Losses are so hard to come back from.
Well, and one thing that if anyone wants to embark on the whole systems journey, again, it does a lot of things. Like I go through when I'm building a system, I'll back test it, a couple hundred times in different parameters and optimization, and it allows me to see hundreds and hundreds of thousands of trades, simulated trades every single week. And there has never been a system that I've ever run that's right more than 60% of the time. I think the average across my system is like 54% of the time. So it helps show you that. And I think when shows you that math, it helps with what you were talking about, Sean, where I know that every time I hit the button, I'm going to be right 54.3% of the time or whatever it is. So it puts you in that mind frame of 45% of the time I'm going to lose money. So I can't have those one giant trades that wipe everything out because it skews that math and the system's no longer profitable after like one or two of big mistakes like that.
Yeah.
I think this is one of the most surprising things to new traders is when you tell them your win rate. So like, do you have a certain system with a really low win rate, and what is it?
I think, and it's probably my best performing in the long run, is just a weekly trend following system, and I think it's like 37%. I can actually look right. I've got it right in front of me. Yeah, 37% win rate, but the average winner is about 17%, and the average losers like 6.5%. And hold time, the average winner I will hold for 13, 14 weeks, and the average loser I'm out in 4 weeks. So I think just laying out all the stats, and if you're not interested at all in being a systematic trader, I think this is really an argument for tracking your stats and having that kind of written down so you know that. Like I know that every time I hit the button, the odds are I'm going to lose money on every trade. So it puts you in that mind frame for I better stick to what I see because the odds are against me every time I hit the button.
There's a trader I spoke to a while back, and he was a very successful trader. I can't remember who it was. I just know that he was a very successful trader. And he told me, he's like, every time I put a trade on, I assume I'm going to lose.
Yeah.
Mm-hmm. And that was a surprising thing to hear.
I do too. You're supposed to, right? But like, that's why we know our win rate, because we're managing our own expectations. Otherwise, I would just feel like a loser all the time.
Yeah. Yeah, I think he told me he's far more surprised when he has a winning trade. It's like, oh, I didn't expect that. Okay, great.
Dude, when I lose, a lot of times I'm like, oh, all right, getting closer.
Yeah, and it just again the knowing we're playing a probabilistic game, right? There is no trader that has ever existed that has had like a 95% win rate and has been in the game for a while. Because the only way you achieve that win rate is just with the worst
because when I go
reward.
online, I see lots of people advertising 95% win rates.
Trust me, I'm on Twitter.
I follow them all on Twitter.
And yeah, you just know. And I think this is one thing that I really like that they covered in the CMT. There was a chapter where they actually broke down. They said we looked at all of the top trend following hedge funds, and the average win rate was like 46% or something like that. So, you look at that and you go, okay, I'm not alone. And you're right. It's one of those. If anybody asks, and like Sean said, we worked for this fintech company, and if anyone ever came in and asked for your win rate, you just know right away that is not a trader. That's someone who's new to the game. It's someone who's trying to figure it out. If they come in, they ask for your win rate, you're like, okay, I gotta go back and I gotta explain that doesn't matter.
I think the nickname we had for those people were future former customers.
Yep. Yeah, because they go in, they're like, oh, I'm looking for the highest win rate. I'm like, I can build you a system with a 90% win rate. It's not going to make you money, but I can build you a system with a 90% win rate.
You get bored. Right? Like you program the systems. So like, what is your day-to-day like? You don't need to do too much. Like how much of it set it and forget it situation have you set up for yourself?
So the average week, and this is something I'm going to be sharing a little bit more with my followers soon. I'm going to open up the doors a little bit, but on the weekend, I go through all of the weekly charts for 150 different ETFs and relative charts, that kind of stuff. I run my system, so that takes 30 minutes to an hour to run all the data and get all the symbols. I go through everything that outputs. I set all the orders for things that I like, And then the rest of it is, monitoring, recording what the trades are. And, I was talking to Sean in the green room here. I'm a nerd. I like to read studies. So people will send me a study and say, hey, this is something that's interesting. So I'll sit and I'll read, and then I'm always testing because, adding more and more strategies is always the goal. If I can just continuously add more strategies, then they will, smooth out returns over time if they're uncorrelated. So yeah, it's a lot of, reading academic papers. It's a lot of, listening to CMT events and listening to what other people are doing, and then going and testing that. So that's a lot of my time is being spent doing that. And then, yeah, when it comes to entering orders, I look at everything I do is kind of based on the close. So I'm just looking, that 3 to 4 Eastern time is really the only time I watch the market each day. The rest of the time it's reading or doing YouTube videos or whatever.
And that's for entering and exiting positions. You're always doing it at the close, never at the open.
No, never at the open. The price I always found entering at the open ends up being problematic. And all of the systems that I've ran, if it's, buy Monday open versus buy Monday close, and you test that out, all of the tests I do go back to 1980, usually, with focusing on 2000 to 2024. And it never matters in the wash. So for me, I know I'm going to get a better fill if I'm focused on the close. I know that it's a lot calmer to focus on the close. Like, you don't have that craziness going on. So I know that the test is going to be more close to reality, because if I'm programming the system that it's assuming I'm getting the closing print, that's a lot more achievable than assuming that you get the opening print just based on the way the market works.
Steve, Michael is probably one of the smartest guys I've had the privilege of knowing in the business. And thanks to Michael, I did not know this. And it was until I met Michael and got to know him and found out where he lived. I did not know that in the continental North America that there was a time zone east of New York. I had no idea. And that's where he lives in Halifax, Nova Scotia, 1 hour ahead of New York City. I had no idea.
Yeah, so not a fan.
Seafood up there, Michael?
Oh, it's amazing, right? Every time I'm somewhere else inland, right? I'm in Toronto, New York's fine, but anywhere in Texas or even Colorado, someone's like, "Hey, you want to go get sushi?" I'm like, "Absolutely not." The sushi place I got, the guy actually goes and he waits for the fisherman to come in the morning and he buys it right there and he goes and cuts it up. Yeah, lobster and sushi we're kings over here.
Great oysters too, no?
Yeah, well, anything that's North Atlantic, we kill it, right? The whole island's a peninsula, so we have boats just going from all times. It's one of still our major industries is fishing. In a world that everything's technology and all that, there's I actually live basically in a fishing village.
Do you get out there? You look like a fisherman.
Time to time, not very often. I usually stick to the woods. I'm more of a walk around in the woods kind of guy than out there fishing. But I like to eat a lot of it. That's for sure.
Well, I imagine that there's a lot of people watching this podcast and who are in our orbit don't really have any concept of what life in Halifax, Nova Scotia is like. In my head, my image is there's a bunch of longshoremen walking around, drinking beers, getting in bar fights. That's my vision. I'm sure I'm way off base. Tell us what it's like up there, man. I mean, I would love to come up and visit sometime.
Looks beautiful.
Absolutely. You guys should. But yeah, it's not far off from that, to be honest. The major industries, we've got fishing. We used to have coal mining and a lot of folk songs being written. It's the massive Navy base. A lot of your guys' stuff and stuff from England will come there and stop and fuel up. So the second most pubs per capita in North America, because it's a big university town as well. So yeah, a lot of drinking, a lot of sailors, that kind of thing. So yeah,
sounds similar, Mike, to where I live. I live in a big Navy town, big fisherman town. We're on the coast here. Oh,
you can swim. You can swim where you live. There's no one getting in the water, and unless you're real drunk up here, that's for sure.
Hey, forgive my ignorance, but you said how it's a Navy town. Does Canada have its own Navy or no?
Oh yeah.
Forgive my ignorance. The terrible question.
No, yeah, we've got we're going out with you guys a lot. right? We lean on you for a lot of the army side of things because we've got an ocean on each side, so we don't have too much of a need for that. But yeah, we've got a pretty big navy, and there's really only two places that they can hang out is on because right everybody lives near the bottom of Canada, so it's Vancouver, BC, and then it's Halifax, Nova Scotia, and that's where everything kind of launches.
I'm embarrassed by my ignorance. I grew up in Buffalo, New York. Literally, I could throw a baseball across the border into Canada. So I always tease it, but I'm actually I feel pretty truthful when I say it. I feel like I'm half Canadian. I grew up, a lot of Canadians around me. I had Canadian television channels at my house. I mean, I watched Canadian TV as much as I watched American TV growing up. So I feel partly Canadian, and I'm ashamed that I didn't know that you guys have a Navy. My bad.
You're nice and you're used to the cold, so you're basically Canadian at that point. Really.
So what are the big differences? So you're East Coast Canadian. Is there like a big difference between the East Coast and the West Coast in Canada?
I've always wondered this too. I've always wondered this.
Like,
good question.
Do you have a coastal rivalry? Are the politics different?
Are the accents different?
The politics are definitely different. The far West Coast is more left, and then the middle, where they have all the oil, that's usually more right. Our political system's a bit different because we have many parties, not just two. So there's left, right, and in between, all that kind of stuff. But yeah, it's a bit different, right? The middle, where you have Toronto, that's going to be the financial hub and where a lot of the technology is being built and all of that. So that vibe is going to be way different from out here, where things are a little more relaxed and more based on natural resources and all that. And then you have up north, if you want to go up there, and all of the natural resources and everything that happens from there. I've got a buddy who's a police officer up there. He actually sent me a video the other day of him going outside at 1 a.m, just bright as day out there. It's really messing with his head. It's either very, very bright all the time or just pitch dark all the time. And he can't wrap. It's really, really weird on the circadian rhythm and all that.
Are the accents in Halifax different from Toronto and different from Vancouver, or is there a similarity all the way?
Yeah, I think I don't notice it as much, but every time I join any kind of a live stream or whatever, it's like, oh, this guy's Canadian. He's saying about and all of that. So I think we have a little more of the Canadian twang on the coasts, and then the guys in the middle are probably a little bit closer to New York, right? Because Toronto is just a miniature version of New York anyway.
Interesting. Okay. Yeah. I mean, in the US, I think we have very distinct accents in all parts of the country, right? The Northeast, you got Boston, which is very different than New York, which is very different from Minnesota, which is very different from the South. Like we have 7 or 8 different accents in our country, but in Canada, it seems like there's really just one dominant one.
I went golfing with a guy the other day, and after a few holes, I said, "So where from Long Island are you from?"
And that's a valid question.
Yeah.
But you got to keep in mind, so Canada geographically is bigger than the US, but it's like 90% of Canadians live, within a couple miles, I think 20 or 30 miles of the border. And if you actually draw the map out, it's most Canadians live more southern than Seattle, Washington on that side where it dips up a bit. Most of us live below that. So, yes, it's a very big country, but you take 90% of the people and they just exist in a line just right across Canada.
It's funny you say that because I've been to 3 cities. I've been to Toronto, Quebec, and Montreal, and I just looked it all up on the map, and then I zoomed out a little bit, and I'm like, I basically went to the same place 3 times. They're all kind of like right, I got to check out the coast. Sounds nice.
The coasts are more chill, but yeah, when you get those that group of 3 of them, that's generally where again a lot of the commerce and everything happens, and that happens a lot because of the French English divide and fights that went on all through history. But yeah, you get the major cities there, and then as you go out, if you're in Calgary or Saskatchewan or something, you're going to be doing something with forestry or oil, something like that. And then on the coast, you're fishing. You're usually a little bit more chill. That might be my bias, but I definitely like the coast.
Hey, let's bring this into finance for a second because this is an interesting question. So Toronto is a very different city than Montreal, right? I mean, the 2 obvious ones are in Toronto, everyone speaks English. In Montreal, most people speak French. Of course, everyone can speak everything, but those are 2 dominant languages. But the cultures are very different between these two cities. Those 2 cities are also financial hubs. Toronto's the dominant financial hub. Montreal is secondary. Kind of like Toronto is like New York and Montreal is like Chicago in a lot of ways, right? So, do you find that because of the fact that there's a cultural difference between those two financial districts, do you find that the traders that you've come in within your orbits over the years, is there a difference in risk-taking attitudes or any like philosophies about trading that you've noticed?
You're going to get a lot more of that kind of New York vibe from Toronto, right? A lot more of the I'm going to be a big city guy and wear a suit and talk fast and all of that. And you don't get that so much in Montreal, but you also need to remember the scale of our markets. There's a reason that I trade 90+% US markets, a little bit of crypto, and then maybe every now and then I'll take a shot at Canadian companies because the scale of the markets is just dramatically different. Plus, our markets are boring. It's all financials or resources. So yes, you've got that derivatives exchange. Doesn't really do too much to be blunt. So yeah, I would say it's as if you say that New York and Chicago is like 70% New York, 30% Toronto, or 30% Chicago, I'd say Toronto is like 90+% of everything that happens there. Plus the language barrier. There's a lot of rules without going into all the Canadian history of everything that happens in Quebec has to have both languages. It's not like you guys who have a primary and then a secondary language. If you are in Quebec, it's actually French and then English. And if you're in New Brunswick, it's 50-50. So it gets a little bit weird. So I think for that reason, a lot of things gravitate to the English side of things because everything's so international nowadays.
Sure. As I had the unique pleasure of visiting Montreal with Michael here. We one summer we went to a trading conference together, and we got to tour the city. We went on a little hike. Boy, it was beautiful. I enjoyed Montreal. That was my first time there. I want to go back. It was beautiful.
Amazing. You should come on out. I'll fly over. We'll have a great time.
I think we have to do a Canada trip pretty soon. Seriously, Sean, with the portfolio stuff, I feel like we'll find ourselves in Canada eventually.
JC just told us this morning he's going to Toronto this summer without us. What a jerk.
I'm there all the time. The beauty, the thing that I love about Halifax is I'm hour and a half flight from Toronto and I'm an hour and a half flight from New York, right? So there has been days back in my crypto days when I was doing a lot of that stuff, flying out to Toronto at 5:30 in the morning and being home by midnight across, right? Flight out and a flight back. So yeah, and anywhere in that part, you guys come over, I'll show you a good time.
Hey, that reminds me, Mike. That reminds me. When I first met you, you were involved at a company where you were traveling to China doing some crypto stuff. Do you want to talk about that? Is there some lessons we could talk about there?
Well, I was in Wuhan in 2019 before anybody knew who Wuhan was. That was interesting. Could have been. My boss was really sick one of the times on the way back. But it was an interesting time. Essentially, I worked this was way back, during that initial spike, the 2018, 2019 craziness. And we were a crypto miner, and we were one of the first custodians to actually get full insurance from Lloyd's of London. So big insurance company. So it was basically mining, and it was insurance. And then insurance, so custodial type things. And then what I was actually doing is building algorithms that, they got me for that for crypto. And this was back in the day, and we talked about how I started to trade when the markets were inefficient and I adapted as they got more efficient. It was amazing to see crypto do the exact same thing, just way faster. So when I started, the whole game was, can I buy Bitcoin here and can I sell it there? And can I make a little bit of a spread? Can I build these bots just to wait for these discrepancies and take them back in? On top of just a bit of technical analysis, right? Telling the guys as it's starting to crash, it's time to sell our mining rewards, that type of thing. It was a lot of fun, but yeah, I got all kinds of stories. I could ramble on forever if you guys got questions.
Speaking of language barriers, going to China, that must have been pretty challenging, no?
Super weird. It was super weird.
How long were you there?
A couple weeks, a couple times. We'd go there and back. The idea was that this was around the time where they were starting to crack down on trading and on owning. And there was a lot of people out there who had, especially Ethereum, a lot of Ethereum back when it was GPU mined. It wasn't proof of work. It was proof of stake then. And, they're like, okay, what do we do with it? right? If we move it and convert it to cash and move the cash back, that becomes a problem. So there was all this talk about, developing trading models where you're moving from Ethereum to different altcoins and back and forth and all this as a way that, you can keep everything in the blockchain and off financial institutions that the Chinese government could see. But it was so weird. Thankfully, we had a handler guy, pick you up at the airport. He just walks around with you the entire time.
Oh, Strezza, that sounds lovely. That would have been great last summer for us.
Sean and I learned about the importance of having a handler when you're traveling overseas. The hard,
Yeah, we went to 7 cities. We had a handler in one city, and that city was fantastic. The best experience of the whole trip. The rest of it, shit show.
Yeah, because I obviously couldn't speak to anyone. I didn't know customs. I didn't know, we went to a dinner with one of the prominent CEOs, and he's like, okay, every time somebody toasts you, you have to toast them back. There was just all these, it was a good debrief. You just sit in the car before we go, and he spins his chair around. He goes, don't do this, don't do this, don't do this. Make sure you do this, make sure you do this, and everything will be fine.
Sean, how many people do you think we offended without even ever knowing it?
Oh, hundreds, I'm sure. I'm thinking of that when we were in Hong Kong. We went to the China Club and we were all terribly underdressed.
Yes, that was awful. Yeah.
And it was very awkward for us.
Insanely different world, too, from Shanghai, Hong Kong, and then you go to the mainland. And when you cross that barrier, there's a whole other level of customs. I had to get a visitor's visa where I had to turn in my passport to the Chinese government for a while, which was terrifying, right? They do, the palm scan and, eye scan and then the whole 9 yards. It was definitely very intimidating. And the way it ended, I guess, we can ask questions about what I was doing for sure, but the ending was insane, in which I am never going back to mainland China, because they just walked in one day and they said, okay, we own your company now.
You saw them firsthand, really?
Yeah, they said no foreigners, because we were doing some stuff with cybersecurity as well. They were going to use the blockchain to record medical data on Chinese citizens.
Target, 2 things that they clamped down on at the same time. You were doing cybersecurity and crypto.
Yeah. And people walked in and they took a look at us and they said, no foreigners. And we all kind of got the message, and we got up out of our chairs and we booked the next flight out, and we just left, because there was just no, they gave you a big song and dances. Oh, we will sell your guys' stake in the company and blah, 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 blah. So my whole end of my crypto parade is I have a whole bunch of shares of a company that was called Hyperblock, that's now bankrupt on the Canadian Stock Exchange, and then a whole bunch of shares in this Chinese company that, they're going to sell my stake and pay me out. And that was 2018. I never expect anything, but it was basically just, if you're not from China, leave, and we own this now.
That is story, man.
That jives with the experience we had in Hong Kong, just some of the people we talked to out there about the stuff that's going on there. But one last question about China. So
Sure.
There's a stereotype. I'm not necessarily sure it's true, but there's a stereotype in the financial world that Southeast Asian traders, particularly Chinese traders, are in a lot of ways degenerate gamblers. And so you combine that stereotype with crypto.
Mm-hmm.
Did you get a vibe meeting the people out there that there was a different kind of approach to risk or a different thought? Were they just totally cowboys, or was it something else?
It was totally cowboys, and then it was guaranteed returns. They were always about, I talked about how, again, this man, one of the CEOs I talked to owned, let's say, a lot of Ethereum. At this price, if he still has it, it's a lot of Ethereum, billions in Ethereum.
Wow.
And the idea was, again, he couldn't, I don't know what the rules are now, but he couldn't sell it and get that money. And then if he sends it out to a third party outside of China and sells it, how does he get the money back, right? It became this big deal. And it was, I'm like, okay, we'll develop. I was basically just thinking of a relative strength system. You take your Ethereum, you take the coins that it's easily converted into and something that's completely on chain, and you're holding most of that Ethereum, but you have another system on the side that's rotating into, Solana and all of these different coins as they're working, just a basic relative strength type system. And he's like, oh, well, that sounds good. What returns can you promise me? And I'm just like, Well, last thing I'm going to do is, take some Chinese guy that could be worth $1 billion and guarantee him anything with any kind of system I build, because I'm not going to spend the rest of my days looking over my shoulders. That's for sure. But it was very much I want you to trade aggressively and you're not allowed to lose any money.
Oh yeah, sure. That's easy.
Yeah.
I think a lot of the times they have that kind of cowboy risk attitude because it's also just the markets that they have are
Mhm.
far riskier and less regulated, and have to deal with more frauds and stuff like that than we're used to here.
Yeah.
Lucky.
Yeah, when you can't trust the books, right? It becomes much more complicated, right? And I think you're seeing a lot of the same in India now, and that's why I think the CMT is just exploding in India, and I think a lot of it's because there was so much cowboyism and fraud that it kind of shook the markets, and now they're going, okay, we need some sort of system around these things to try to keep a lot of these traders safe. I was speaking to Joel, which I know you guys know well, and he was calling it the 90-90-90 rule, where the brokers are saying people are losing 90% of their money. 90% of their clients are losing 90% of their money in 90 days. And that's why they're moving to technical analysis, because they're like, we need systems, we need ideas for that.
Yeah, that jives. In fact, Joel that you speak of, I visited Joel in India before the pandemic, and we toured went to an options trading firm. They were trading options on, I believe, the Indian index, the Nifty 50 index, I believe. Don't quote me on that, but they were definitely trading options that traded in India. And these guys were trading, I mean, they were banging keys when we were in there. I mean, it was crazy. Look, the sound was deafening the way these guys were just crushing keys. There was like 100 traders in this room. And we went into the little side office. We were talking to the guy who runs the place, and we were just kind of talking about his business. And he told us point blank, he said, the biggest challenge we have here is that these guys are trading firm capital, and we have to watch them like a hawk, because every one of these guys I hear trading, they come from the slums, the Indian version of slums. They've come from nothing, and they have no problem going back to nothing. So they're swinging for the fences with nothing to lose. And he's like, our job is to make sure that they hurt us as, the least amount as possible. And I was like, wow, that blew me away. Like they knew what they had, and they're okay with it as long as they can somehow manage it. It was amazing.
Yeah. And again, I think that's where markets, as they develop, I think you're going to, when we were talking about the beginning, I think you're going to see that same through line of, the prop firm industry being super huge and cowboys and people going crazy. And I think that's just going to, because everything moves faster nowadays, you're going to get that smoothing out much faster. I think the CMT and the education they're doing is going to do a good job at that, teach some, basic risk management, trend following, that type of thing. But yeah, you saw it in crypto. I think you're seeing it in a lot of these foreign markets now, and every market that pops up, you're going to see a lot of insanity. And then eventually it's going to kind of smooth out and become, boring like everything else.
Well, shout out to the CMT. That's the Chartered Market Technicians Association, for those who are not on the cool club. Michael is a CMT. Straza is a future CMT, right, Straza?
That's what they tell me. So one more question, because I'm trying to ask this to everybody that we have on the show.
Okay.
Like, it's clear you're a total nerd. You're one of us. You love this stuff. What keeps you so passionate about markets after all these years? What makes you excited to go to your desk every morning?
It's different. It's the fact that the GME stuff is a perfect example. Just insane stuff can happen all the time, and that's super fun. So it's different, and it's a puzzle, right? So I talked about in the beginning how I got hired from one of the prop firms. I played a lot of games, right? I was obviously a nerd dude, so I was playing a lot of video games. And for me, it kind of feels the same way. I have a puzzle to solve. That puzzle is always changing. Some of the systems I run today may completely degrade, and I have to come up with new ones to replace it. And that's just super fun. So, and it's an always evolving puzzle that I get to play with every day. And if I'm right, I end up making money from it. So it's like, well, what else do you want? And lastly, I think, we were talking about the teaching of it. I enjoy that as well, just because I think I could probably save a couple. I can't save them all, but, I can find people who are getting led astray by, a lot of those Twitter people that we talked about that are telling me, their life savings into some. If I can grab a couple and say, here, these are some things you got to look out for. I think actually one of the members of your portfolio club there, Brett, that we all know, he came for me and he wrote me a giant email saying, thank you. I had no idea what I was doing when I got into this and all this kind of stuff. That kind of stuff I think is great. So you got the puzzle and you got the fact that I think I can do a little bit of good inside the game. Then again, what else do you want?
Yeah. Oh, sorry. I was going to say, I've known Michael for the better part of a decade now, and I can confirm he is a special kind of nerd, but the best kind, the best kind of nerd.
Mm-hmm.
Did you have a memorable teacher or mentor when you were starting?
Trading? Yeah, absolutely. I had a few of them, but I'll give him a shout out. It's greatstockpicks.com. I hate the name of his website, but he's one of the real ones. And yeah, it was very much you walk in the door, here's risk management, and just, the dude's been doing it for like 30 years now. He's day trading. I'm not really interested in day. I have a couple algos that I run, but I'm really not interested in the day trading side of things anymore. But yeah, and seeing that doing a little bit of good, I think that definitely helps out to say, okay, there's something good I can do while I'm here too.
Well, Michael, speaking of mentorship, you're not technically, you don't hold yourself out as a mentor for hire, but the company that you've started, Stats Edge Trading, you're offering lots of great insights, a lot of tools of the trade and to get people started. So what's the best place for people to engage with that? Is that on your website?
Yeah, just go to statsedgetrading.com. I've got that free course that I talked about that I did with my wife up there. That's about it for now. I'm building some stuff that will be cool in the future, but really it's just me kind of sharing my thoughts about the market and what the algos have kind of spit out this week.
Well, Mike, hey, this has been awesome. Thanks for having the patience to do this again. I'm glad we did this a second time. I think this was better the second time.
Yeah, this was great. What a pleasure. Thanks, man.
Anytime. I stand here, I read academic studies and I look at charts. So anytime you guys want to have me on, I would love to. I love what you guys are doing. So yeah, this was fantastic.
So I thought that interview was pretty awesome, Sean. I know we did it twice, and that might have been obnoxious for him, but I'm glad we did. We talked about all different stuff.
No, Mike's, he's one of the good guys, dude. I've known him for almost 10 years now. We've worked closely together over the years, and it's true what they say about Canadians. They're nice guys and girls, and man, he's such a smart guy. Like, I know it comes across. I know it came across a little bit in this interview for sure, but I mean, he's really is one of the smartest guys I know. And very thorough. Like, he thinks through trading strategies and thinks through programming and all these things. Like, really, it's kind of amazing to watch him go through his process.
Even the way he got there, right? Really early on in his career, I found it fascinating that he almost like figured out what hedge funds were all about, and then he went and built his own. Right?
Yeah.
Like you said, a lot of people are drawn to the systems stuff because they know that they're their own worst enemy and they're just trying to remove the human. He went to systems because he was looking for an uncorrelated stream of returns.
Right. Which is, I mean, that's the exact right thing people should do, but very few do. And it's genius. And man, I gotta say, like, when I first met him and we talked about it while we had him on, I was so blown away of the crypto work that he was doing in China. I mean, he was working on stuff that at the time was still so new. Like, nobody knew what was going on. Like, he was doing things that people hadn't even considered in the crypto space. And he was so far ahead of the game in that. It was cool to witness.
And that story's crazy too. Like, he got to see that firsthand. A lot of people probably look at, charts of Chinese equities and say, what has happened here? That's exactly what happened. Government just walked in and said, you're closed now. This is all ours.
Yeah.
Well, if we ever been so bad for so long.
Yeah, for sure. Well, there's been talk amongst the team here at All Star Charts of someday doing the chart summits again or something like that in person. And, we will invite some of our smartest people around to come and give presentations. We got to get Mike involved. He would be a really great addition to the roster for sure.
And I want to take that course that he did because I think, first of all, what a good guy, right? To have patience for something like that.
Unbelievable.
Also, what a great idea. I mean, try to explain it to somebody who doesn't understand it at all. That's how you know you're good, right? If you're really going to master something, You should be able
His wife had zero knowledge of trading at all. So she was as green as it comes. And it was cool. I mean, I think he did like 24 episodes or something. It's a long arc. And they went deep. It's good.
You think I could pull that off? Me and Rose?
Yeah, why not? She's young enough. She could learn.
She would get out of here. Wants nothing to do with it. Probably lucky.
My wife is the opposite. She's heard about it for so long. She doesn't want to hear about it anymore.
Yeah, I think that's probably part of it too.
All right. Well, hey, I'm glad Michael is able to make time for us and come back and do it again because we screwed up and corrupted the file the first time through. I don't know how that happens. Our tech guys in San Diego are real wizards. Right, Giancarlo? I see Giancarlo hanging out.
You're
in the
a ball breaker. This is ordinary course of business, Sean. These things happen, and we get by.
All right. Well, I can't wait for our next one. Straza, dude, this was good, man. I'm glad we did this.
Yeah, this was fun.